Okay, right now this is a live account, and I have $5.50 here, so I'm just taking this trade crash 500. Okay, so we are going to see how it goes. This is a trade, and I will tell you why I took this trade. It's a very simple thing. This is a fast a quick one. You understand? A spike is going to come, as a result of this moving average, this green moving average. A spike is going to come. Just any moment from now, a spike will come. If it doesn't come now, by the time it get to this black moving average or this red moving average, it will come. So you will have to hold the trade. Okay, but why do I took this trade? Very simple. These three moving averages are what my confluence indicators. They give me direction somehow after my price action. I've already taken price action and noticed that this is a downtrend. Okay, this is a downtrend from the 1 minute time frame. Once you see this green moving average below, okay, or above the price, once you see it cross, once the red one crosses and the black one crosses over the green, it means it's time to catch spikes or to catch spike, whichever one. Either you catch one spike or you catch multiple spikes, depending on how the market direction is. So what I'm using is these three moving averages, not these ones. These ones are not part of it. Okay, these two are not part of it. Once you see this red moving average and this black moving average crosses over the green moving average, it's time to sell when you are dealing with crash. You can use this strategy for crash and boom. Okay, you can use it for any pair at all, both gold, currency, whatever you are trading. Okay, so now, and once like I told you, a spike will soon come. So let's go to the 5 minutes time frame and see what is going on. You see, if you see the 5 minutes time frame, the green moving average has been crossed. The red and the black moving average has crossed the green moving average. So spike is still going to come. Okay, so that is just the analysis I've taken. When you go to the 15 minutes time frame, it's the same thing. You can see that the green moving average has been crossed. The red one has crossed it, the black one has crossed it, even our 200 moving average has crossed. So there's going to be a lot of spike, kind of, you understand. So let's go to the 30 minutes time frame. 30 minutes time frame is also the same thing. The red moving average has crossed, the black moving average has crossed, the green is below. So there's going to be spike. Okay, so this is just the strategy here. It's very simple. It's very simple. But if the market changes direction, that means the spike will not come the way you expect it. So you might not catch multiple spikes. It might just be one spike. It might just be two spikes. You understand? It might just be three spikes, depending. So just like I told you that the spike, once it gets to the green, the spike is supposed to come once it gets to the green moving average. But it has passed the green moving average, as you can see. But we are still going to hold the trade. When it gets to the black, if it doesn't spike, when it gets to the red, if it doesn't spike, then you can close your trade, but it's still going to spike just because of the equity that we have here. Okay, just because of the equity that we have. So let's see, let's back test and see. You can also use this strategy to buy. Okay, you can use this strategy to buy. How do you buy with it? Let's go to a place where the moving average has crossed over, like this point where you see the green moving average has crossed over. The red has gone this direction, the black one gone this direction, the green one has gone upward. They have crossed. Whenever the green moving average is crossed to this point where the green moving average is at the top, you are going to be buying. Okay, then whenever the green moving average has crossed to the bottom, you are going to be selling. So that is how simple this strategy is. This strategy is a very simple one, a very simple one. That is exactly how it works. So let me remove this other one so that we can get a clearer picture of what we are dealing with. Okay, so as you can see, we are still waiting for the spike. Okay, we are still waiting for the spike to come. We are still waiting for it because I know that as now it has gotten to the black moving average. If it doesn't spike, if your equity is enough to hold to this red and it gets to the red, and if it doesn't spike, then you might close the trade, and take the loss. Okay, so at times it's like that, but we are kind of confident that it's going to spike because from the 5 minutes time frame we can see that the moving average, from what you can see, the moving average is below, though there might be a reversal of trade or a drawdown, but what I'm sure here is that this is a drawdown. What is happening here is a drawdown. It's actually going to sell, but it's drawing down, to take out some people from the trade. It will definitely take out some people's stop loss before it pumps to sell again. Same thing, if you watch here, this is a sell because the moving average is still below while the other averages are up, so it's not a reversal of market. But we have the lower low, the lower high, the lower low, so it might come to lower high and then maybe go down lower low again. So I guess you understand what I'm trying to say. And another thing you should take note of is patterns. Patterns. Now this is about to draw a W. Okay, it's about to draw what? A double bottom, which is a W like this. So by the time it completes this W, it goes up maybe to this point or to this point, it might spike. Most times it will not get to this point. Maybe within this point or this point, then it will spike. Okay, so that is a W. So I took this trade so that you'll be able to see what I'm talking about. This strategy is the best. It's very simple. I've been using it to make a lot of money. So let's watch. I'm still expecting the spike. It has passed. It has crossed the black. It's going towards the red. So let's just watch and see what happened at the marketplace. So after the spike, I'm going to show you the indicators that I've used. I'll show you the setup so that you can set it up and then you can begin to use it to milk the market. Another thing I want you to know is if you are new to this channel, I would like you to subscribe. To this channel. You can share this video to your friends so that they can take advantage of it. Then you can join our copy trading. You can join our WhatsApp group. When you check the description page, you're going to see a WhatsApp link. So you can join our WhatsApp link, or you can contact me directly if you need a mentorship and any other thing you need. So as we can see, this is really a long drawdown. It's about to hit our stop loss. When it hits the stop loss, which is this red moving average, and it doesn't spike, that is why it is red, danger. If it doesn't spike, then you can close the trade and wait for other opportunities. Opportunities will always come. Okay, so this is the strategy. Is how to use the strategy. Let us go to 15 minutes time frame and study it again. From the 5 minutes time frame, we can see that a spike is going to occur. Because what is going on here now is like consolidation. This is a lower low, a lower high, a lower low, maybe a lower high, then a lower low. Okay, so that's what is about to play out. a lower low about to play out there. Okay, the lower low is about to play out. Once it gets to this is the lower low, the lower high, the lower low. Maybe when it gets to the lower high, it goes down. Then another thing we are sure, these places where we have if we can draw our resistance. So from this place, we begin to face a resistance pull. So when the market gets to this side anyhow, which is a lower high, it is supposed to drop, and that means that we enter the trade too early. Okay, it is going to drop. We have another resistance that is showing there, so we can draw both of them. At this point, there is another resistance here where the market seems to refuse to allow the price to go. Okay, so those are the two places right now. So we are going to just wait, let it play out and see what happens. This is a W. This is a W that is likely to form here. So what happens after that W? We can get a spike. Maybe when it gets to this point. Now, if your equity is small, you have already hit your stop loss. So what do? You close your trading loss so that you have more profit, more capital to trade upon. Okay, but for the sake of this video, I'm going to leave this this thing and see how it plays out. Okay, because I am still expecting that spike to spike. Let's go to the 4-hour time frame. Okay, so this is the 4-hour time frame. The 4-hour time frame seems to be a downtrend somehow. Okay, seems to be a downtrend. So good, the spike has come. I don't know if you notice it. Let's go to the 1 minute so you can see what I'm telling you. This is a spike, so we entered quite early. It's still going to spike, you see. So what I'm saying, we got to this point and then it spiked. It didn't even come to the resistance just from this point. I told you once it get to the red moving average, you can close your trade, but this is just 1 2. That tells us that we always need patience in our trading. We need patience, and it's still going to spike. So I will still hold this trade. Why do I say it's still going to spike? Because if you look, the green moving average is still at the bottom here, and then the red moving average is above it. The black is also above it, so it will spike. By the time the price, this is the price, by the time it rises up, on touching the green moving average, it will spike down again. And at times it might not even get to this green moving average. It will just spike based on how the market is, especially from the 5-minute time frame or from the higher time frame. So you can see this is pure price action that I'm trying to teach you. Pure price action, but using this indicator for those of you that have been requesting this indicator, because I had to make this video quickly so that you can benefit from it. Okay, remember I told you something about higher high, higher low, higher high, higher low. So that is exactly what is going on. This lower high, lower low. So this is the lower low, this is the lower high, and then this is the lower low, and it was about going to a lower high, but it spiked. Okay, but if it hadn't spiked here, when it get to this resistance, it will spike, or this other way, it will spike to complete the lower high. But once it breaks through this resistance, then you should know that a reversal has occurred. Okay, but why I said a reversal cannot occur now, it's because when you go to the higher time frame, you notice that this is still a downtrend. This moving average is telling us this is still a downtrend. When you go to 30 minutes time frame, same thing. It's still a downtrend we're experiencing. Look at the moving average. When you go to 1 hour, it's the same thing. when you go to, let's say, 4 hours, the 4 hour is the same thing. Look at it, downtrend is going down, and this green has started pulling, though the red is here, you understand, but is already, the market is going down. Okay, and anything is possible. There might be a reversal from this side. Yes, anything is possible, because if you look at it, if we draw our trend line, you can easily agree with me that a reversal might occur here, the trend line. Okay, that's a trend line. If you draw the trend, or let's put it this way, let's mark it this way. Okay, so you can see that when it getting to this point, is bouncing up. So once it breaks this place, okay, you agree with me that it's a downtrend. So because of this trend line, it might reverse. The market might what reverse. So let's go back to the 1 minute and study and see what happened, if there might still be another spike. I'm still holding this trade. I'm still holding the trade. So that's just how it is. Let's check crash. Let's check crash 1000 and see, or crash 600 and see how it goes. Okay, now if you look at this, is crash 600. So I told you can also buy with this strategy. Now look at where you buy, the point where it crosses. How do you know where it crosses? Let me tell you, when the green moving average is approaching the red, it will approach it. So once the green moving average crosses the red, it's at this point it happens. It's at this point, once it crosses the red, you can now enter your buy. Okay, and you must make sure you have done your price action so that you will know if it's an uptrend or a downtrend. Okay, so that spike doesn't take you out of the market. Or if you are scalping, once the green moving average has crosses the red moving average, you can take just the red take 5 candles or 10 candles, depends on your equity. Okay, so I think I'm going to pause this video. For this spike. Or before I pause this video, let me quickly show you the indicators that we used while we are watching what plays out from this particular trade, because like I said, we are still expecting another spike. Okay, at least by the time we pick up one spike, we can close the trade, or two spike, we can close the trade, for the sake of this video not to be too lengthy. Okay, so now the indicators, let's go. These are the moving averages we will use, just the moving averages. So this first one here is period is 25, shift 0, method linear weight applied to weighted close, that's HLCC4. Then the star is 3 pixel green color if you are using the same background with me. So you set it up and click on save. So the second moving average is the red one. Okay, we have the period is 80, shift is 0, method is linear weight applied to weighted close, HLCC4. Then the star is 3 pixel on a red. The red indicates your stop loss. Then we go to the third moving average. That's what we need. No, not this one. The third moving average. It's only 3 you need. Okay, we have a 50, period is 50, shift is 0, method is linear weight applied to weighted close, all the same thing. Then star 1 pixel. Then I use black. You can use 3 pixel if you want, and I use black. So that's all the indicators for this setup. So what we are looking at now is for the spike. We're looking at for the spike. So I'm going to pause this video so that it doesn't take your time. I'll pause this video, then I will show you the outcome before I stop the recording. So just stay tuned for a while. Okay, stay tuned for a while. Thank you. Okay, so I'm back again, and I want us to continue from here because I observed something. Remember, I told you that this market might reverse. Yes, this market might reverse. Okay, so though we still have a resistance up here, so when the market gets here, it's likely to spike, or when it gets to the second resistance there, it's likely to spike. But there's something I noticed when we go to the 5 minutes time frame. There's something I noticed. Okay, let's go to the 15 minutes time frame. Okay, now this is what I noticed here. This doji candle, this pin doji candle, this one that looks like a cross here, this one is a doji candle, or a pin bar candle, right? So when you see something like this, it simply means that the market is likely to reverse. As the market progresses, it's likely to reverse. Once you see a sign like this very structure, that is what it tells. So this spike that we're expecting to come, the spike might not come the way we think. Okay, as the market is going now, if it get to this place, if it doesn't shoot down, if it get up, it doesn't shoot down, then just know that the market has reversed. Remember, I told you something from the 4 hour time frame. I told you that the market might reverse here because it seems like, let me remove this thing, it seems like an uptrend there. Okay, because this red moving average is still at the bottom, signifying an uptrend. Do you understand? Signifying an uptrend, kind of. So, and that from the 15 minutes time frame, this very candle, this one is a signal that the market is likely to reverse. So you might not see everything from the 1 minute time frame. Okay, so while you are expecting a spike here, the spike might never come again the way you think. Okay, so at this point, we are going to close the trade, bearing the loss that have occurred. We are going to close the trade because of what we have analyzed from the market. So, but remember what I told you, when the green moving average is at the bottom and the red has crosses, the black has crosses, then it's a time to sell. But you have to do, price action. You have to do some analysis so that you'll be sure, just like what I did now. Though we came very late, we came very, very late. Okay, we came very, very late. So thank you so much for watching this video. I want you to subscribe to this channel, and if you have any question, just ask, comment below. Then if you want to contact me, on the description page I have my WhatsApp link there. Thank you. So see you. Bye.